Welcome to Follow the Money. I'm Rain Musngi. Join us as we explore the tools and insights you need to jumpstart your financial journey. We break into regular programming to bring you this breaking news. A skyscraper under construction collapsed in Bangkok on Friday afternoon after a strong earthquake struck neighboring Myanmar. The United States Geological Survey, or USGS, said the quake was of 7.7 magnitude and at a depth of 10 kilometers. It was followed by a powerful aftershock. The epicenter was about 17.2 kilometers from the city of Mandalay, Myanmar's second largest, which has a population of about 1.5 million. People rushed out of buildings in panic in Yangon and also in the capital of Thailand. Trading at Bangkok stock and futures exchanges were halted. Chinese authorities warned of a possibility of a tsunami. We will continue to monitor developments out of these areas. Keep it here on the Bilyonaryo News Channel. The Philippine financial markets are navigating a complex landscape marked by technical disruptions, widening trade deficits, and evolving investment opportunities. To shed light on these developments, we are joined by Sandra Araullo, Chief Investment Officer at ATR Asset Management, who will provide her expert insights on the current market dynamics. Sandra, thank you so much for being here. Welcome to Follow the Money.
Thank you for having me.
We appreciate you joining us today. Of course, so many changes, especially we're most affected by external factors, it seems. Are there indicators or pronouncements that you're carefully watching and closely looking at?
So there are so many things happening at the same time. I think the task at hand is to look at the signals and separate it from the noise. And right now, we're really looking at how consumers are spending, and how we are recovering. Actually, we move as if the pandemic has been long behind us, but economic scarring is real, and that has affected consumer behaviors. So domestically, that's a thing we're watching out for. Even globally in the U.S., it's also the labor market is also something that we're keeping an eye on, and particularly the policy rate, monetary policy, is also something that we're closely monitoring.
Do you feel that our Bangko Sentral, for example, our economic managers, as well as the financial managers of private institutions, are reacting, proactively enough to geopolitical changes as well as U.S. policy changes?
Yeah, I believe so. The thing is, uncertainty is high, and it's hard to plan when uncertainty is high. So the direction has been to tighten up, to kind of not make big bets. So even the BSP, while it is staying committed to an easing cycle, the speed at which it's being implemented is being moderated, taking into consideration the things that are yet to take place, that are the known unknowns, so to speak. So there's a lot of unknowns around policy in the U.S., trade policy. So in the meantime, the prudent thing to do is to wait, actually, to wait until there's a little bit more clarity.
So should investors then be parking their monies and funds in safe haven assets for now?
There has been that move, and that's a big reason why you're seeing some underperformance in the Philippine markets. It's been U.S. exceptionalism that's driving the flow from emerging markets like the Philippines towards the U.S., but that was early in the year. Yes. We've seen that halt. Somehow in the U.S., we've seen some of the safe haven trade. Locally, though, rates are high. Long end rates are pretty good, interest rates. So that's a good place to put money in. You get coupons and you get capital gains for when interest rates move lower. Mm-hmm. But then again, there is deep value in the Philippine equity market. it's being priced today, so there's value and there's price. We know what the value is. We know that these corporates are making money, making earnings are in the low teens, no, very decent. And then there's the price of the market. And what's being priced in is a lot of the uncertainty, a lot of the negative sentiment, and that kind of dislocation is what happens not very often. In fact, historically, well, technically, it happens about, so it's like, on average, price and value, the gap between price and value is narrower. Today, it's so big, it's so wide, it happens only like 5% of the time. And I'm being generous. It's actually 2.75% of the time.
Where is that coming from, that huge gap between price and value?
Yeah, it is the uncertainty. It is the uncertainty. It is the negative sentiment. But that isn't to say that it cannot persist. It can. So it's important to your question earlier, where should investors put their money? It still really depends on what are you investing for. If you are investing for let's say retirement, oh my goodness, you should be putting your money in the equity market. Okay. But if you are already don't have a very long horizon and your appetite for risk is not so high, fixed income offers, bonds, government securities, they offer pretty good value as well. Of course, the thing that's working against the Philippine market, which is its illiquidity, can also flip quite quickly, and it can really, once that, sometimes it's animal spirits, who knows? But when the market does, or when all of the uncertainty subside, it can also, the illiquidity can work for the market to the upside as well. So, it's just a matter of really, as an investor, identifying what and why are we investing for.
Sure.
Yeah.
Well, two things that I got from your insight there. One, that there is a certain frustration with how the equities market is performing. It seems like when, global markets are up, the Philippine market is just so-so or even declines. And then when the global market is down, the Philippines is also down. Although today was an exception, it seems, only because of the tariffs on automakers. So that, plus the second part is earnings of corporates. We're still smack in the middle of corporate earnings season. What's your assessment of corporate earnings? We've seen like very high highs and very low lows. What would you say to that?
Actually, if we take a step back, broadly the market may have languished, but it's a stock picker's market, actually. So there are last year, there were a lot of names that fared really well. ICT, for example. This year to date, it's the banks that have been performing really well. I think it's just, from an earnings standpoint, again, we have fairly optimistic expectations for this year as well, meaning we see the momentum building around earnings. Some sectors more than others. Banking, as I said, it stands to gain a lot from the digitalization and the cost efficiencies and the reach that will afford the banks. And then there are those that are, challenged. Property is challenged, consumer is challenged, but we see that as temporary, really. So again, it's that time for when discipline is really important as an investor. Typically, I guess if you're going to be emotional about it, the Main Street would tend to flock to U.S. equities just because it's done so well, but it's really frothy. In fact, we have been taking a little bit of money away from US, away from tech, just because we've already made money from it and valuations are pretty stretched and the risks in the horizon are really building up. You know, it's a scenario for the US to actually enter into a recession by year end. It's not the main scenario, but we're kind of preparing for that. After you've seen the equity market move quite significantly over the last 3 years, US exceptionalism, right? That can also come off quickly if a recession becomes the narrative.
Yeah, it seems to be, we just saw a report today that 30 CFOs from the U.S. are expecting a recession by the end of the year. And such a, market moving and bad word, of course. But, all things considered, we're also seeing reports that most of the brokerage houses in the U.S. are also moving money away from the U.S. Where is it going?
It's going to economies that are perceived to be able to withstand growth challenges.
Is the Philippines one of them?
Philippines, we are challenged by our twin deficits. So while the trade policy of the U.S. is not impacting, or we don't expect it to impact us directly, it does affect global growth in general.
Yeah.
And because we are constrained by our fiscal deficit somehow, and also the trade deficit, that is perceived by foreign investors as not putting us along with the top choices. But that said, I think it's really, at this point, we can all, for a long time, it's about, okay, when are the foreign flows going to come back to the market? We don't need foreign flows. We ourselves are, I think the Filipino investor is becoming mature enough that we can rely on our own capital to support the markets, That's why part of the job really is to advocate and to educate, where we expect to get to a point of foreign flows being significant but not the determinant of how a market moves. We have a few IPOs that we're looking forward to, so that can invigorate the market, particularly GCash. We're really looking forward to that as being almost like a watershed moment, the way Petron was in the 90s. I wasn't working yet in the 90s, but I hear my bosses say that was, there's a potential there where the GCash IPO can be that big catalyst that can, because everybody knows GCash, right?
Right.
So it's a matter of executing it well, making it available to both institutional and local investors. Make it available on GCash. You want to participate in an IPO, liberalize it. We can do so many things actually to energize the local market.
And ATRAM has actually been very, very active in GCash and making sure that even the smaller investors would be able to participate in the equities and capital markets.
Yes,
Can you share with us some of the growth that you've seen because of your engagement with GCash?
So for us, in the past few years, it's been about access, making it easy to access, making investing accessible to every Filipino, really.
Right.
And then you have the pandemic and all of the consequences of that. You have a lot more people getting into the online payments, GCash, online shopping, etc. So these might have been very challenging times, but they also opened up a lot of opportunity.
What kind of growth did you see?
What kind of growth? Well, ATRAM has been growing about 50% compound annual growth rate in the last 15 years. And it's been driven by different things at different points in time.
Sure.
The digitalization is just starting. We are seeing a lot of uptake or a lot of clients opening accounts using GCash, but not yet actually investing. They're dipping their toes in, but in terms of really building momentum, we're not there yet. That's why I feel like, if the GCash IPO, when it happens, making it available through their app to the ordinary Filipino can really change the game for the Philippine market.
Are you saying that the GCash investors that you have at ATRAM, their contributions isn't quite up to par yet? It
Not
hasn't
yet.
been significant
Not yet.
to
Not
the
yet.
whole assets under management.
Not yet, but
Right.
the number of investors is quite amazing.
High.
Yeah,
Okay.
quite amazing. So I think again, it's a long game. It's really developing the investor base, investor behavior, getting them to get into the habit of investing and not just doing a quick trade. So I think it's a lot of behavioral change as well that needs to happen.
Right. Well, I do want to talk more about the IPOs on the horizon, but we do have to break for a few reminders. Stay on BNC and follow the money.
Friends, this is Cardinal Chito Tagle, and we have good news for you. The Word Exposed now airs on Bilyonaryo News Channel. That's Channel 31 on Free TV and Channel 24 on Signal. Join us every Sunday at 7 o'clock in the morning to 8 o'clock in the morning and at 3 o'clock in the afternoon to 4 o'clock in the afternoon. Thank you and God bless you.
Your professionalism and dedication to delivering news with clarity and compassion have earned you this prestigious recognition. Congratulations, Corina Sanchez Rojas, for winning the Best Female Newscaster at the 38 PMPC Star Awards for television. Only here on BNC, the Bilyonaryo News Channel.
And we're back and follow the money with ATRAM's Sandra Araullo, Chief Investment Officer, the leading independent digitally powered asset management firm in the Philippines. You're excited about the IPOs, especially GCash when it's launched. Maynilad as well. What kind of messaging do you think this might be sending to investors here in the country as well as abroad?
I think we really need to ensure that it will be a successful experience for the Filipino investor. Unfortunately, in the past, most recent IPOs have failed in giving that to the market. A lot of Filipino investors, sometimes first-time investors, get excited about participating in an IPO, and then in a year, it's half the value. I mean, that's not a good experience at all. So, and that's kind of been keeping a lot of Filipinos on the sideline when it comes to IPO. So not a lot of excitement there. But again, we have a really good opportunity here with, the likes of Maynilad, AirAsia Philippines, GCash, even Maya. So hopefully, we're past the languishing phase.
All right. Well, that was a buzzword back during the pandemic. But, this move by the PSE to lower the public float, they were saying that it's a move for GCash or ahead of GCash's IPO. How do you feel about it?
So there are a lot of stakeholders that are working together. That includes the PSE, the SEC, the issuer, GCash, the investors, the Fund Managers Association of the Philippines representing the common shareholder. I think at the end of the day, our objectives are all aligned, and it is to generate as much interest from public investors so that GCash gets its fair valuation in this liquidity event that they have online. GCash would like to see, would I think they actually prefer to list locally. So we have to enable that. We have to make sure that it doesn't come at the cost of, leaving too much on the table for them as the issuer. So I really am excited about it. I think considering, all of the pros and cons and not being rigid about the 20% float is a good thing. It's a good signal.
Mm-hmm. Well, still on the PSE, of course, you can set the stage all we can, but you still have little incidents such as the trading starting an hour later. What kind of signal does this send to some of our investors? Is it really that big a deal or not really?
I mean, in the short term, it does have, it's disruptive, but in the scheme of things, it happens few and far in between, and we are able to recover from it quickly enough without a lot of, and it happens everywhere. It's not unique to the Philippines. I think it's really more of, the investors are much more concerned about the ability of the PSE to improve on transparency around. It's a self-regulating body, so implementation of rules and consistency. I think that weighs more than technical glitches, because as I said, it happens everywhere.
Right, and not just here in the Philippines. And of course, on the PSE, they've actually been embarking on a lot of initiatives, including the 78.33% stake in the Philippine dealing system, but has not fully acquired the fixed income trading platform. Are there implications to this?
I think generally it's a good thing. Again, it helps promote transparency in the market. It helps promote liquidity. So on balance, from a capital markets development standpoint, the PSE is doing its job. Again, it's all about being, how's that saying? Luck comes, smiles to those who come prepared. So, when, it's not a matter of if, when the time comes, and we're ready, then that's when a lot of the value that has been discounted thus far can be unlocked.
On the side, still talking about capital markets, it just makes me think about, of course, the sovereign funds. You have Maharlika Fund here in the Philippines. You have the Danantara in Indonesia. That's been the cause of some controversy also with the Jakarta Stock Exchange. That's caused also some drop there. Is it supposed to inspire more positive, investor sentiment, or do you feel it affects the market at all, or perhaps not?
It may have an effect on sentiment, but we don't know enough ourselves, so we tend to just take the information as it comes and not base our decisions necessarily on perception around Maharlika Fund itself. We have noticed some, we've noticed that it has had an effect maybe on liquidity, because a lot of the GOCCs might have not been as active in the market lately as they have in the past. May have something to do with Maharlika, but again, it's too vague and too ambiguous, and we'd rather focus on the things that we are certain about and that we know. And really, what we know is, again, a lot deep discount in the market, but it takes discernment on which names to invest in. So it's a bit of a stock picker's market.
Right. What are your stock picks? Which ones are heavily discounted right now, terribly undervalued? Can you name some of them, or perhaps the sectors?
Right now, banking is doing really well. We think BDO is in a good spot to, they're not as digital yet as the competitor, so they're in a position to adopt and unlock more value through digital transformation. It's out of favor right now, property, but we still like Ali. We still think that the value from a fundamental standpoint of Ali is quite attractive, and honestly, the price is I mean, it's as cheap as it wasn't during the pandemic. I mean, how does that make sense? They are making money.
Right.
Technical factors coming into play. Foreign investors may be taking money out because there are other considerations that they have. But from a Filipino investor standpoint, it's still a sound pick. You also like JFC, but there have been challenges in the near term. But over a longer horizon, we like it as a consumer name.
Right.
What else do we like? We like, I would say the banks, BPI as well, Metrobank.
Still on the banks, of course, Bangko Sentral ng Pilipinas, still a lot of wagers out there on how many basis points is going to cut for the year. What would you like to see by the end of the year?
What we would like to see is the BSP following on with its guidance. And it's guiding for 100 basis points. Most likely in April, we might see a 25 basis point cut. But the governor is also quite careful about, caveating it around, the currency. We want to see some stability in the currency. We're also looking at what's happening in the U.S. A lot of the policies have an effect on the fiscal side in the U.S., which might lead to inflation again in the U.S., which prevents the Fed from cutting interest rates.
Yeah.
And we need to manage the relative policy,
Right.
or what's called the gap, policy gap.
Yeah.
So we can't be cutting while the Fed is steady or even might pivot, So there's that consideration.
Lots of eyes on the decoupling, it seems,
Exactly,
in that particular moment. And, of course, PSEI, everything's so volatile, everything's so uncertain, but is there a peg for the PSEI for the end of the year, or, an outlook for the peso?
I think we, based on some assumptions around earnings, we think earnings and valuations. So we're not going to be so demanding on valuations. We'd still put it at around 12 times PE, not demanding at all. I mean, the average is 18 times, right? We've been 21, 22 times for a while. So let's say just holding there, and it's more of the earnings that should drive price action. Conservatively, we'll put it around 7.3, 7.2 for the target. I mean,
It's pretty optimistic.
I'm already sandbagging it actually, because our numbers are much higher than that. But I'm
Okay,
trying to
that's
factor
actually good,
in.
yeah.
I'm trying to factor in the sentiment part.
Certainly.
I'm discounting I'm using the negative sentiment and the uncertainty to discount our fair value expectation. So which puts us at around 7.5.
Nevertheless, I hope it does happen. And perhaps as we end the show, maybe we can ask you a personal, maybe light question, just to bring down the rhetoric of the PSE and investing perhaps to the regular titos out there who thinks their best asset is with a microphone. I mean, with a karaoke machine. How would you explain investing to a regular tito?
Okay, investing is, if a karaoke machine is one's idea of investing, fine, because that's, you derive value as an individual. You derive value from having a karaoke machine. It's the same with stock investing or investing in the market. It's all about the value that one can derive from it. And from an investing standpoint, that value is growth. We want to be prepared for the future. And that's what investing is about, putting your money to work. And if you have the benefit of time, then there's no reason why we shouldn't be participating in our own equity market. It's our economy. It's bridging the gap between our day-to-day as Filipinos and investing in Philippine companies that drive the economy. So, we all know that we're in the malls all the time. Who's running the malls? What earnings are they delivering? And everybody's saying, oh, it's only the rich people making money. No, you have mechanisms that will allow ordinary Filipinos to participate in that growth. And that's what I would say to a tito who is deriving value from a karaoke machine. There are many ways to derive value from the market.
I would like to say that its caveat, it would be, your neighbor's sentiment on whether your singing is actually good enough to invest in. Sandra Araullo, Chief Investment Officer at ATR Asset Management, thank you so much for breaking down these market complexities for us today. We appreciate you being here. Thank you so much.
Thank you. It's been a pleasure.
And that is it for today's Follow the Money. I'm Rain Musngi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News Channel. Always on time.